Hello, I'm David Buckland and welcome to this week's Video Insight. Today I'm being accompanied by Gary Rollo, Portfolio Manager for the Montgomery Small Companies Fund. Gary, in the last couple of years, the small cap stocks have underperformed the big cap stocks quite significantly. What's your thesis around this?
Thank you, David. Well, yeah, you're right. Smalls have underperformed the broader market considerably since the start of 2022. Big caps are up about 4% in that time, while smalls, well, we're down about 20%. As economic uncertainty arrives, small caps do tend to underperform big caps as investors move money out of small, less liquid investments into more larger ones. Now, that's what we've seen, but those conditions, they don't last forever. And once that economic uncertainty recedes, the longer term performance characteristics play out. And this is the backdrop for smalls that we see today. And we see this as a very interesting setup. So the underperformance that's been driven by the macro, stock prices not following fundamentals of the company, and we're seeing valuations compressed, and it's a stock picker's market out there, we think.
Thanks, Gary. As Ben Graham once said, in the short term, the market often acts like a voting machine, but in the long term, it reflects much more a weighing machine.
Well, I think in the very short term, I'd say it's like a washing machine. So, yeah.
A washing machine. Gary, given that underperformance in the last, or since the beginning of 2022, there must be many stocks which are exactly exemplified by that voting machine versus weighing machine contrast, where fundamentals are actually doing very well, but the share price is doing relatively less well. Did you want to name one or two stocks or just walk us through those fundamentals?
Sure. There are a number of examples out there, but let's pick on just one. Alliance Airlines, its stock ticker is AQZ. AQZ shares are down over 30% since the beginning of 2022, yet the business fundamentals, the thing that counts in the long run, they've just got stronger and stronger since then. So let's break this down a little. First, let's look at the valuation setup. Historically, AQZ is a business that the stock market has valued at around 5 times forward-looking EBITDA. Today, on fiscal 24, its next EBITDA print, it's trading on 4 times EBITDA. And if I look out into fiscal 25 and fiscal 26 and take into consideration consensus expectations, that falls to 3.5 and 3 times. That's cheap. So there's that valuation disconnect versus history. Second, let's consider the fundamentals of the business. AQZ has a lot more growth today than that business has had historically. That's because it acquired aircraft during the aviation downturn that accompanied COVID, and now those aircraft are being put to work. The outcome of that is a significant contract that AQZ has with Qantas, and that's going to deliver material earnings to AQZ. And we think over time, the extra aircraft they bought will more than double the earnings pool in AQZ. You don't see that type of earnings uplift happen in markets every day. So that's the second thing. Fundamentals are much stronger now than they were. And there is much better earnings visibility now too. That contract is a multi-year contract, up to 7 years. And so that's visibility that we haven't had in the past. Normally, higher growth and better earnings visibility is something that the market likes to pay up for. And instead, we've seen a significant de-rating event rather than the positive re-rating that we think should have happened to the shares. So that's that valuation disconnect versus the fundamentals that we look for. And lastly, earnings on these new assets that have come into AQZ's portfolio have yet to be fully seen by the market. The last results that we saw from AQZ was the second half 2023 period in August, and they were much stronger than the market expected, and we saw some consensus earnings estimate upgrades. We think there's more to come in that regard. We think AQZ is at the beginning of its earnings upgrade cycle, and that the market hasn't fully understood the earnings power of all these new aircraft going to work. So that's an attractive combination in our view, and that's why we hold AQZ in the fund.
There you have it, ladies and gentlemen. Immense relative underperformance by smalls over bigs, but as Gary pointed out with Alliance or AQZ, enormous opportunity set with very, very strong earnings growth and great visibility over the next few years. Thanks very much for following us, and please continue to follow us on both Facebook and Twitter.